Joining us now, Stephanie Link, Chief Investment Strategist at Hightower and a CNBC contributor. You know, Steph, in the general news cycle, sometimes you wait around for stuff to happen. Right now, I got like 10 things that we could talk about in business news that they're just ready-made for us. Every month we get the jobs number. Every month we get inflation readings. And, you know, Jay Powell, every week those guys and gals are saying something, but it's big, you know, two-day testimony. So there's all these things happening. But with that backdrop, both Mike Wilson, short-term, and Ken Fisher, long-term, says we're in a bull market. Do you feel any better about things? I mean, if we had a little softer labor picture, do you think we're the P word? Can I start using it again, pivot?
No, I don't think the Fed is going to pivot anytime soon. And that's because if you look across the board in inflation, if you want to look at CPI, you want to look at PPI, core PCE, unit labor costs, services ex housing, all across the board are still very high. And so I think that the Fed has the green light to continue to be aggressive on rates and maybe just keeping rates higher for longer because their dual mandate is jobs and inflation. They got to get inflation down, and they can do that because jobs and the job market is so very tight.
That doesn't mean that you're selling all your stocks, though.
No, because I do think that there are pockets of the economy that have actually held in remarkably well, and that's the services side of the economy. I mean, last week we got the ISM number that was much higher than expected, and new orders were up 62.6%. So the numbers underneath the surface on the services side are still quite strong, and so that's a big part of the economy, right? We talk about it all the time. Services is about 70% of U.S. consumption. So we're rooting for services. We're rooting for the consumer. I think the consumer is in a little bit better shape. It's not perfect by any means, but that's the area of the economy where I want to look for opportunities.
We introed you saying that you're not necessarily going to sell stocks with China exposure. What do you own where that matters?
Look, I mean, I think that there are opportunities in China. It wasn't too long ago that the IMF was expecting 3% GDP growth for the year in China. Now, all of a sudden, about a month ago, they raised that number, the GDP number in China for the full year to be 5.2%. We know what happened over the weekend. The PBOC is about targeting the same. So 5% is pretty darn good, especially up from 3% last year. And so whether this is a secular bull market in China or not, or in their economy or not, I don't think maybe that's the case. It's really more, it's a cyclical opportunity. And so you want to have exposure. And I want to own U.S. multinational companies with Chinese exposure, because I really do think, you know, you get the transparency from the U.S. companies versus China pure plays. So Nike, I own. They have about 15% exposure to China. The story with Nike is getting their inventories down. It was 43% growth last quarter in inventories. But if there's one theme within retailers that we've learned over the last couple of weeks is that inventories are coming down across the spectrum, across many different kinds of retailers. And so I expect with Nike, the same will happen. And then, of course, it's the big transition to DTC, direct to consumer, which actually grew 35% last quarter, and it's now 27% of total sales. Why does that matter? It's growing faster than wholesale, and also the margins are much greater. And then a couple of the other companies in China that I have exposure to, it's Estee Lauder, which has 30% of exposure to China. You have Starbucks, which is a special situation story with the management change. They have about 9% exposure to China. Wynn Resorts, you get almost not a pure play in Macau, but certainly exposure in Macau. Macau gaming is up 55% year over year, year to date. So I think that there are a lot of ways you can play the theme, and these are blue chip quality companies with good free cash flow as well.